Hey, it's Mack with PriceActionTradingSystem.com, and today is Thursday. It's August 27th. This will be our last chart lesson for the week. I'm not doing them on Fridays as we've been going over the summer. School started back now. The days are still long. The time hasn't changed yet, so I'll probably continue to not do the chart lessons on Friday until um, either the weather gets bad or the time changes, whichever comes first. But anyway, um, the volatility and the volume continues to be high. Not as bad as what it was. Of course, it's still 30 minutes left to go in the day, so anything could happen. But things don't seem to be, even though the volatility is still high and things are still a little bit questionable as far as what I would call not being normal price action. We're getting, it's slowing down some, I guess is what I'm trying to say. We're not quite back to normal yet, but it is slowing down. Is this just a break in the action before it gets wild again? Or are we going to go back to the status quo and move back towards 2100 or whatever price level? Maybe it'll be 2000 this time and we hang around there for another 6 months or so. That's kind of been 2100's kind of been the magic number. Uh, we've been above that and below that level, but we've just kind of hovered around that level for months on end, it seems like. Anytime we got very far away from it, that was a great buying opportunity. So that seems to have changed somewhat. We'll see. I mean, we've been probably how much lower than this? The low today was around 1934.50, and I want to say we've been as low as I think we've been lower than 1850. I want to say, but let me just make sure that I'm not telling you. Yeah, here's the low around 1830. That's what I would think I would remember being the low. So um, we're about 100 points off the low. I would be surprised. Actually, we did come back and try to test that low. It's not very close. So I would be surprised if we don't try. Actually, we did try to test it. Yeah, we got pretty close within 20 points. So that might be as close as we ever get. But I'd be surprised if we don't retest that low again uh, sometime over the next week or two before we go higher again. I could be wrong. You never know with price action. That was a very exaggerated sell-off day. So we might not get back down there. But I would be surprised, knowing what my experience with price action. I would be surprised if we don't at least attempt to test that again before we start trending higher again or whatever. So um, but anyway, let's talk about. I got quite a few emails yesterday. People liked the different format of just talking more about theory and price action and the rules and that kind of thing. So I'm probably going to do something else similar to that again today rather than go through all the trades. There just continues to be so many, but I may talk about a few of them, especially some of the ones that might be more interesting. But I'm going to read you an email. I got another email today. I like reading these. People like to hear this stuff too because a lot of times you can relate to exactly what they're saying. So it shows you that there's always light at the end of the tunnel. But I got this one yesterday. The title is First Ever Profitable Month. And then it has a dash, thanks to you. Uh, but the email goes on to say, hey, Mac, I just wanted to share. I've had my first ever profitable month this August, and it's all thanks to your excellent teachings and systems. I still consider it a fragile business for me, so I don't want to get too overexcited. And that's good because when you start to get that used to haunt me some. Once I started to get it, I would get a little overconfident, and then I would make a big mental error. So you got to guard from that. So that's very smart. Going back to the email, in my previous attempts at live trading, I used to give back all of my hard-earned profits in a few bad trades and more, much more. It's not a pleasant feeling at all. I've been there and done that, so I can certainly relate to what he's writing there. So I'm sure most of you can as well. Thus, I'm trying to not overtrade, aiming for just 1 point of profit a day. just to get to the state of consistent profitability. And that's what I say. I've said a lot of times, start slow, have a reasonable goal. If it's 1 point, hey, that's 1 point. Think about that. How hard is it to get 4 ticks? If you can't get 4 ticks, you got a long way to go. But you'd be surprised that 90% of the people can't get 4 ticks. So, but start slow and work up. Going back to his email, it seems to be working. Failed second entries after a break and a new extreme at a key entry point will give you that scalp about 90% of the time, if not more. And that's what I try to get across to people, is that if you're just patient and you wait on only the best trades, there'll still be 3 or 4 or 5 of them every day. And if you get just a point off of them, that's 3 to 5 points. And if you can get a couple of 3 points on some runners or something, next thing you know, you can make 3 to 10 points a day. Just taking basic setups. Find one that you can spot real easy and start with that one. And start small and just think about it. It's a job. It's not get rich quick. If you're trying to get rich quick, you're wasting your time. But anyway, he goes on to say, on my small account, I was able to generate 32% this month. Now, people will tell you that's impossible. But here's a guy that just wrote me an email out of the blue that's doing it. And I get emails like this all the time. And so think about that. Most of your hedge funds, the guys that do it for a living, are satisfied if they can get 7, 8, or 10% a year. Most of them are happy to get a profit during the year. And here's a guy with a small account that made 32% in 1 month. 1 month. So don't let people tell you this can't be done. Don't believe it, because they don't want it. I mean, just because the problem is most of them can't do it, so they don't believe anybody else can. That's a big problem with trading. And if you hadn't read my article that I posted just a couple of days ago about why most traders fail, go read that, because that is about as close to the truth as you'll probably ever hear. It's probably the biggest truth you'll ever hear, because most people won't share that with you. Most people don't know that information, to be honest, because they don't think anybody can make money. So, but anyway, he was able to generate 32%, which is unbelievable for me, he says. I will keep it small and grow gradually. There's no hurry. I'm doing it part-time because of my day job. I live in Israel, so the U.S. market is active on the afternoons here. So here's a guy, he lives out of the country, and he made 32% on his money. So, and he goes on to give me some accolades. I won't read that, because this is not about me. I'm not trying to pat myself on the back or anything like that. He's the one that had to put in the hard work. I just pointed him in the right direction. So it's not me, it's him. It helps to know which direction to go. But once I point you there, it's like I always try to tell people, you got to do the hard work. You're the one that has to go out and study your charts, has to sim trade every day, and then study your trades. And that's what makes you a better trader. Just sitting here trading every day, and then when the day's done, getting up and leaving, does not make you a better trader. You have to learn from your mistakes, and you have to study your chart to learn to see the patterns, to learn to see what's going on. And while I'm saying that, let me clarify that. We are not pattern traders, because I get so many people that send me emails every day. This was a perfect second entry short. Why did it fail? Well, we're not pattern traders, so there's second entries all over this chart that we'd never consider taking. So that's why they fail. You're not reading the price action properly, and you're entering a second entry that's probably going to end up being a trap. And sometimes they do look like perfect second entries, but they're not. And if you understand what's going on, but there's also sometimes where even a very experienced price action trader can get fooled and trapped. So that just happens. But the price action itself is never wrong. If you have a losing trade, there's something there. Go back and study that trade until you can figure it out. If you can't, then ask me and I'll point it out to you. I'll show you what I see anyway. And if you do that long enough, eventually you get to where you can do this. And, here's a guy who made 32% in 1 month. All right, let's just say he had a $1,000 account. Well, he's got a $1,320 account now. If he had a $2,000 account, well, he's got a $2,640 account now. So, think about that. That's pretty good, that's pretty good on a small account, which most people say you can't do this on a small account. And what I would argue in return is you can't do this on a big account. If you can't do it on a small account, you don't need to be trying to do it on a big account because you're just going to lose more money. Start small. If if you've got $2,500 in an account and you're only trading singles, that's all you should need. Because if you lose that, then you're not a profitable trader. You weren't trading profitably, or you wouldn't lose that money. You'd make more money than you lost, and you may not go forward very fast, but you would at least still have your original funds, and you'd probably be growing it little by little. So if you can't do that, so don't let people fool you into thinking you need $50,000 or $100,000 accounts. Real traders they're mouth watering when they hear that, because they know that it won't be long to that all that money is going to go from that account that person has right over into their account, and that's what's going to feed them. So, so don't believe that you got to have those big accounts, because if you can't do it with a small account, you can't do it with a big account. So use your common sense. But I hear that. I mean, there's so many mistruths in trading out there. And I don't think people really mean for it to be. That's just been the common knowledge that they hear everywhere they go. And so it becomes the gospel of trading. But a lot of it, in fact, most of it is probably wrong. So, and these people aren't trying to always necessarily do this to you on purpose. The problem is they're honestly trying to help. They just don't know any better themselves. And once you get there, once you start to see this and it starts to make sense, you'll look back and that light goes off. You'll look back and you'll say, I understand now exactly what he was talking about that day. But for now, it probably doesn't make sense to you. And it never will until you get there. I mean, honestly, I can sit and listen to somebody talk about trading, and within about 5 or 10 minutes, just listen to them talk. I know if they're really a profitable trader by the words they use and the things they say. If they start spouting off all this stuff that's not real, that's considered gospel, I know real quick they're not making any money. So they might be fooling themselves or somebody else, but they're not going to fool me, because I know through experience that stuff doesn't work. But anyway, enough about that. Get off my soapbox and we'll talk about what I saw this morning. This was what I call a spike and channel. And notice the smaller term trend lines and trend channels working in between as well. You can see where I stopped marking my smaller, shorter term stuff. It was when I was done trading today. But notice what happened here. There's a shorter term one working up. You got a break, a new high, and then you had a correction. But the reason it bounced here is because there's a bigger two-tiered channel. This is too steep. Trends don't last very long that steep. A good, healthy, solid trend is about a 45-degree angle, much like this right here. And you could get this trend channel by 8:30 this morning, definitely by the time this double top happened, because then all you had to do was draw your line across there, drop it down. You see, oh, it fits right across here, across these highs and across this low. And then, of course, prices bounce right off of it there. And then they come up here with it, and they bounce right off it to the tick here, and then it overshoots it a little bit, and then it heads down. Continue to overshoot it, but you can see where it's holding as well. And then look, it holds on the upper side, and suddenly it reverses, and it's going the other way. And let me show you what happens here. Notice this new high here, and we've overshot it, so you've got to be really careful going long up in here above this, what's been holding all day. I mean, it's always possible that there's another tier that's an equal distance from this line to this line, so way up here. But the fact that we didn't go far and then it reverses pretty strongly tells you that this is just an overshoot. We got overdone. And a lot of times an overshoot, even without a break, because I don't really see a break up through here. There's no break. But an overshoot like this will lead to a reversal without a break and a new high because the market just gets overdone. That's not super common, but you see it enough to know that an overshoot like this will often lead to reversal. So once you see that and it starts working lower, don't argue with it. Just start trading to the short side. And that's what a lot of people will ask me. How do I know when to start going short? What's happened? They'll start trying to go short all through here, and they get burned. And they say, well, when do I know to go short? Look, we had a break, and then, if you drew the short term, we had a break and a new high, and I started looking for a short, and I got burned. Well, the problem is if you're unsure, don't start looking for shorts until you get a confirmed trend line in the other direction. Then start looking for shorts. But there's clues, and we talked about that yesterday, but let me show you what happens. Look how every time prices are making higher lows all the way up through here, and then suddenly you make a lower low, and it goes through the EMA. You notice we got through here, but it shot higher again. We peaked through barely there, but then it shot higher again. But notice what happens here. It peaks through, it tries to go higher, and then it just keeps going. Then you get that little trap right there, a failed second entry long, and it makes a much lower low. And so now you got a trend working the other way. There's actually a short-term trend here. You can see you get a break, two legs to a new low, and then you get a correction. And then the bigger pattern takes over. You meet the high again, it holds, and it turns down. And there was a short right there if you wanted to take a counter trend trade, which I don't recommend because if you tried it all over in here, you got burned. So just wait. Wait and make sure that, it's done and over with. And so I wouldn't really recommend taking any shorts on this until over in here because you never know if you're going to get a retest for the high or not. But once it turns down off this trend line, then you know you got a downtrend. You don't know that it's going to do all this, but it's headed lower. But going back to this, notice what happens. We get overdone. You're already probably not looking for any more trades up here because we've gone too far. We're above the resistance area. It did hold as support, and so there's actually a legitimate long right there, especially the fact that you got that little. Let me make this bigger so it's easy to see. Notice you got that little 2-bar matching low, and it breaks lower, and it bounces right off the trend line and turns up, and that's a second entry long. Notice the new high, pull back first entry, pull back second entry, and there's people trying to pick the highs all day long, and look how it runs up real quick. Quick, easy move. So there's a long right there. It's real close to being green because we've overshot this channel, but the fact that we overshot it a few times, that could mean we're going higher. So, I wouldn't be afraid to take that trade. And also notice there's a new swing low here. It's lower than that one. So that's a pullback first entry, pullback. That's a failed second. You could treat that like a failed second entry short and go long there as well. So a couple different reasons. But then, but notice what happens. Notice how all these moves we're going much higher, and then suddenly you barely go higher, and then come back and you don't go much higher again. Then you notice that double top, and then suddenly you make a lower low than that low, and then you make another lower low and another lower high. Now you're trending in the other way. It may just be a short-term trend, but you're trending in the other direction. Then it makes another lower low, another lower high, another lower low, and then suddenly it makes a little higher low. You got to be careful with that one. But where do we go? We go right back, then you get a failed break higher, and look how all those bars are just kind of working down. There's actually a second entry short right there as well, right off that trend line. I probably would have waited on this bar, and when you got a break lower, dropped a limit order in there and see if it come back, and guess what? It did, and then it heads on down. And you got plenty of room before you get out here. Still, I don't know if I would be going, you got to be careful going short here because this has been an uptrend. And even though you got an overshoot, it doesn't mean the trend to the upside's over. However, generally when you get that overshoot, you are going back to the other trend line. And so that means prices are very likely headed down here somewhere. And so coming off this high, that gives you a lot more reasons, if you want to be a more aggressive trader, to go along there. And look at that. There's one of those gaps I always talk about. Interesting. It did back up and fill it, but notice how it closed on its low and then opened on its high. And it did back up and give it that tick before it went lower. But guess where it just happened to be? Right on that trend line. And I show that over and over. When you see that, that's a good clue that maybe your trend line is in the right place. It's amazing how that I see that over and over and over. And not a whole lot you can do with it. Doesn't tell you a whole lot other than, hey, your trend line's probably in the right place. For whatever reason, it gaps over those things. And what I mean by that is look how, even bars that are trending, look how there's overlap on every bar. They all overlap each other, even if it's only by one tick. Well, this one, when it first formed here, didn't overlap. It closed on its low, opened on its low on the next bar, and continues down. This one did back up. Sometimes they won't back up and fill that little gap. This one did. And then it continues on down. So now you might take this second entry short right here, but I would wait until we came back to this trend line and just make sure we're not going to go try to make that retest. I wouldn't probably even go short here. There is a two leg in that first leg, and then there's a correction in the second leg, and they're probably a measured move. So for all intents and purposes, this is a second entry short on a different level. You can see that that's pretty much a measured move. But I would wait on this little trap here and look at that bearish bar. That's where I would wait and go short. And then this is a breakout pullback short because this is a little bit overlapping across here. There's some matching lows. You see that across there. And this comes back and tries to test it. Generally, it will try to test that main area across there, but at the very least it'll try to test the low, and if you put that on the low, you can see we did test that. So and then we turn and go down. So that's like a breakout pullback short, and then we're coming off the low. Generally that's going to lead to the other side, but the market's so weak it just keeps in that. Look, we finally get an overshoot. We actually had a break up here, though. You could consider this a break. Yeah, I'm going to consider that's definitely a break because everything else fits so nicely there. But you got your overshoot regardless, and then now it's going the other way. So now you want to have your trend line on the other side. And you could have had that right off those first two swings there. Just test it on the top. You see it fits real nicely. You got a few overshoots, but we're still working higher. This looks like a break of it here, but maybe not. In fact, I would almost argue that this is probably where the uptrend, you can see that really started. So there's kind of a shorter term trend line working up through there as well. Oops, wrong one. Just see how it fits, and you can see it does fit pretty good on the other side. So either one of those, you could trade either one of those pretty much the same way and get the same, come to the same conclusions. So only difference is you got a break now. But this one looks a little steep. Most of the best ones are right along the EMA. And so this is probably more of a shorter term one within this bigger term one. So anyway, I hope that, let's look at the reversal down here, what finally happens. This is the low. Notice we had the overshoot, and look what happens. We get a little resistance there at the EMA, but it goes on through, and now it's kind of chopping around on both sides, but a lot of the closes are up there. And then you get that little failed push lower, and it shoots back up, And so now it's making lower lows and lower highs, and most of the price action is above the EMA. It comes back, tested a couple more times, and when you get that failed, this is a nice trap right here. Look at this. You get a new, you got this. You really got the new low right here, and so you pull back. There's like a first entry, then a pullback, and you get this big bearish second entry bar. Guaranteed a ton of people got trapped short, and look at that surge. Boom, off it goes. That is a great setup right there. And that bar right there, being a failed second entry short, is going to trap a lot of people, guaranteed. And you know that it was a nice trap by how it surges off. Look how it takes off. But that's how reversal patterns look. You get the action around the EMA that gets through, doesn't really get a lot of resistance. It gets some resistance right there, not a lot. And then it kind of gets above, and it's still making higher highs. It does make a slightly lower low there, and so that's really another trap right there. And you can see how it kind of surged up, but they really didn't get the people convinced that it was going higher until you got the next trap right here, and then it really surges off, and then it's off to the races. That's why I say you can almost say the uptrend starts right here. And that makes, that fits well, makes good sense. And so another thing, people ask you about the trend lines. I generally get it off the first couple of swings. And that would have, if you back out here, you had these two swings coming across here. You don't know that they're the low two swings. It could go lower and you just take it back off. But when it's heading down, you already had your two swings up here. And so you draw that line across there. And then you drop it down and it fits. And that's how a lot of times I'll find the trend line off the other side. Prices you'll start seeing a clear trend off the other side. You start drawing them off there. So keep that in mind. But you can get these lines, and you may have to adjust the line slightly. Like early on, I had it a little bit higher there. And I had this a little bit higher. And it's still close enough. That you could say, hey, maybe that is it. Still close enough, because you could say this was a break, and then you get the overshoot and it reverses. So, but I ended up moving it down a little bit because the closes on this one were down here, and it fits this one better. And notice how you get the low reversal, and we were already coming off the low, so we're headed to the high, and that's the reason it didn't get back there right there. And then this fits down here as well. And you see how it comes back into play. So you can adjust them as you go, but you can still find the main trend line and the main trend channel early on. And a lot of people don't understand that. They'll say, how do you find that? Well, it's just experience. When you look at it every day, you'll start to see it. And as you get better, you'll get more experience at it, and it'll become easier for you. So keep that in mind. Once you've done this every day for 10 years or more, hopefully you can see that kind of stuff. If you can't, maybe you're in the wrong business if you've done it for 10 years and can't see it. But a lot of people have done this for 10 years but never knew to look for it. So if you're just starting to learn, keep that in mind as well. And, with time you'll learn to see all this stuff. Just keep working at it. Study. I can't overemphasize how important it is to study your chart every day. This is what I did for years. I'd come in, I'd sim trade. Then I would put all my trades back on the chart, and I would sit here and I'd go through all my trades first. Why did these trades work? Why did some of them fail? If they failed, I would study that price action closely to see what happened. And generally it would be I was trying to go short up here, or I was trying to get long up here when I should have been trying to get long back down here, and I should have forgot about the shorts up here. So that's generally what trips you up. You're buying high, or you're trying to sell high against the trend. You're counter trend trading, and both of those will get you. So the idea of the trend is up here. The idea is to be buying the lows, buying the pullbacks. And where are the lows going to be? What are the key entry points? Let me say that again. Key entry points. Where are the key entry points? Along that trend line every time prices come back to it. If we get up in the upper half, watching for good setups off that EMA. You got to be real careful about that one because you can get tricked on it, because if you've already had an overshoot, it may be coming back and it may not bounce like here. So, or you might look like it's going to bounce. So you got to be careful with that. But the main ones are across this trend line, and any good setups off the EMA, like the one we talked about. I think we talked about that one. Coming down, we talked about some. But anyway, that's the trades you want to take. You don't want to be getting short down here, and that's what happens. People just now start to see it going the other way. They think, oh, I got to look for a short, and they get short down here, and it bounces on them. And then they're watching and say, oh, well, maybe I need to be thinking long. And then it gets up here, and they go long way up here, and then it backs up, stops them out, and then goes right where they thought. And then they see it going higher. Well, I was right. I do need to get long. And then they get long, and they get long up here, and next thing you know, it's going down. It's like, no matter which way I go, I'm wrong. And that's what happens. You've got to break that cycle, and you got to know where these key entry points are. And to do that, you got to be able to find the lines. And once you find them, you see where all the big moves, where did the trend going up start? Off this trend line. Where did it start the next time? Off this trend line. Where did it start the next time? Off the midline. And then you start coming down. Where did the big move start? Off the trend line. Look at that. Look. Or the EMA. Look. And then it starts going the other way. Where the big moves happen? Off the EMA and the trend line. Big move. Boom, big move. And that's how you start to see this stuff. And then once you start to see it, you start to understand, hey. And so all prices are doing are undulating between strong support and resistance. And the strong support is this trend line. The strong resistance is generally going to be the upper trend, and I call this the trend channel line, but it can also be the midline. Look how it's acting as support and resistance. It's not nearly as accurate as the trend line and the trend channel, because a lot of times it will hold and then the next time it doesn't. So it's less. So really, when you're trying to trade this one, you're looking for traps and things like that. So you're looking for really good setups off the EMA, because this is your key entry point here. And so I hope that's helpful to you. That's 30 minutes worth today. I think that's plenty. I'm going to wrap it up, and we'll be back again to do it Monday. Remember, no chart lesson on Fridays, and I'll be back again to do it Monday. Hope your trading went well today. I hope you had a good week. Have a great weekend, and I'll see you on Monday. But for now, this is Mack with PriceActionTradingSystem.com, and we'll see you next time.